Paul Tudor Jones and others versus Jay Powell and company. The market's caught in the middle. Stocks seem to be voting with the Fed. Stock market thinks the Fed's got this right, at least so far. What do you think?
Well, I think the Fed has it right in terms of it, but how long? I'm more viewing it on the lengthiness of the transitory side of things with inflation. And I think that's really going to be the key. And obviously they're monitoring it. They're watching it very closely each and every day. And that's something that everybody's been up to for a long period of time. But I think the reality of it is, Scott, we bounced off some lows recently. We bounced off, as a matter of fact, in volatility, we bounced off some lows. We were just trading at 15 just a couple of days, as a matter of fact, yesterday and previous days where we'd hit 52-week lows. So it tells me a lot about where people stand right now in terms of comfort and where they are betting with their money, where are their dollars going. And it feels like people are feeling fairly comfortable. I think people do realize that this is transitory to some degree, but I think it's a longer view than most of the people. I don't think this is short term. I think it's going to take a while, Scott, to really get through all of this, to get back where supply is something that we're not as worried about, because that is something that we are continuing to worry about each and every day. Supply in just about every category you can come up, whether that's lumber, whether that's chips, whether that's whatever it might be. And I think that's going to be a problem for a while that's probably more lengthy than most people think.
Yeah, no, lumber is like plunging off of its highs. Maybe that's not the best tell. I don't know. Stephanie Link, S&P is near a high, right? As is the NASDAQ, as are the Qs. The banks are not trading well. The market certainly doesn't seem to be concerned that inflation is going to be a huge problem, nor does it seem to be concerned that the Fed is going to pull a rabbit out of its hat and do anything shocking tomorrow when it actually makes its decision at the end of this two-day meeting.
Yeah, I mean, the meeting today, tomorrow is very important, and I know we're all focused on inflation, transitory, not. I'll get to that in a second. But there are a lot of positives, Scott, that are happening in the economy that I expect the Fed to highlight. So the latest takeaway is the handoff from the goods sector, which is still strong, but going into the services sector. And it's 70% of the U.S. economy, so we want services to do well. And even the retail sales number today that was disappointing, but oh, by the way, was up 22% from 2019 levels. The strength came from leisure, food, and drink. So it's confirming services is picking up. We all know this, but it's good to see it in the data. And I think as a result, the second quarter, you're going to see 10% annualized consumption. Again, a very big part of the economy, and I expect the Fed to focus on it. On inflation, you know where I stand. I think parts are definitely transitory, and is definitely on the commodity side, but parts are not. In terms of wages, the last 12 non-farm payroll jobs reports that came out, 11 out of the 12 non-farm payrolls average hourly earnings were up. That's a good thing. We want wages to go up. But from a corporate point of view, how are these companies going to offset that? It's going to be price increases for sure. We're already starting to see that. Does that crimp demand? So that's why I think some of this is transitory and some of it isn't. And oh, by the way, to Pete's point, transitory can take a really long time. We have 9.2 million job openings out there. That's not going to solve itself overnight. So that's something that I'm watching as well.
So, Michael Farr, Cramer says if the Fed does nothing this week, as he expects, and Jay Powell's already sort of showed his hand. I mean, it's going to be a shocker if they actually say anything substantive about a taper or a time frame or anything of the like.
Right.
Cramer says in that scenario, okay, where they don't do anything, it's energy, it's heavy machinery, it's materials, it's chemicals. On the other side, I've got Paul Tudor Jones saying it's all about commodities and the inflation trade, as he called it. Got some crypto, got some gold, got some cash. I'm not really sure what to do with the other 80% of the portfolio. I got to kind of wait and see. Now, I'm paraphrasing, obviously, Paul Tudor Jones, but you get the point. What am I supposed to do if I'm watching this program today and I'm caught on either side? I'm not exactly sure what to do.
With good cause, Scott. I mean, Paul Tudor Jones yesterday, though, said when the Fed shows its hand this week that he would move the other 80%. And I think he'd move them more in lines with what Cramer's saying so that he can get in front of that, the preponderance of that inflation trade, that he can catch those warm winds that will lift us higher in the sky. look, we are not only seeing inflation, but we're seeing expectations for inflation in today's Wall Street Journal go even higher, 10% for housing, another 8% a year from now in food. So the question is, can you have inflation that just kind of inflates and then stops and maybe trickles a little bit higher slowly after that? Nobody really is willing to hang their hat on what transitory means, other than it's not going to be something that's permanent. But, you know, Stephanie Link has told us for a long time on this program that wage inflation is not transitory. You don't take somebody to $17 an hour and then bring them back down to $13 an hour. So some of this is here. Some of this is going to become very structural and stay with us. Those companies with pricing power are going to be able to execute. Those companies with strong balance sheets are going to be able to endure. And those who have a clear investment strategy don't change their strategy just because crazy noise starts hitting them from the sidelines about the Fed and inflation and everything else. You go back to your strategy, you go back to your discipline, and you say, I'm a long-term investor, and this is what I own, this is why I own it, and I'm going to stick with it.